Welcome to Stoxxies. Today we will analyze a particularly interesting investment product that has attracted the attention of many investors in recent years, the ETF 4GLD, or as it is more widely known, Xetra-Gold. It is an exchange-traded product that gives the investor access to the price of physical gold, without the investor having to buy or store the precious metal itself. Through my presentation, we will see what 4GLD is, how it works, what its advantages and risks are, but also how it can be included in a modern investment portfolio. Stay tuned until the end of the video and you will not regret it. Let's get started. $4GLD is an ETF, and to be more technically precise, an ETC, that is, an exchange-traded commodity. It is issued by Deutsche Börse Commodities and traded on the Frankfurt Stock Exchange via the Xetra platform. Its most important feature is that it is fully backed by physical gold. This means that for every unit of 4GLD in circulation, there is a corresponding amount of gold stored in vaults in Germany. This assurance makes the product more transparent and more real than other derivative products based on contracts or indices. One of the first questions an investor should consider concerns costs. 4GLD is often presented as having zero management costs, that is, with a TER of 0%. However, in reality, there is a custody fee, which amounts to approximately 0.025% per month. That is around 0.30% per year. This is one of the key points to be aware of. It is not completely free, but compared to other gold products, it is considered competitive in terms of cost. The product has significant liquidity, especially for those investing from Europe. With a high trading volume and large managed capital, 4GLD offers the ability to buy or sell quickly, with a relatively limited spread between the purchase and sale price. In addition, the monitoring of the price of gold is done with relatively small deviations from the actual price of the precious metal, which enhances its reliability. In recent years, 4GLD has recorded a significant increase, reflecting the course of gold itself. In the last year, for example, it showed a performance exceeding 35%. Its price is currently above €103, while over the past 12 months it has fluctuated between 75 and €103. Interest in gold as a safe haven has been strengthened by uncertainty in the markets, rising inflation, and geopolitical instability. As a result, 4GLD has been a tool for diversification and stability for many investors. Using technical analysis data, 4GLD is currently showing positive signals. Most moving averages, such as the MA50 and MA200, are showing an upward trend, while indicators such as the RSI and the MACD reinforce the assessment of a continuation of the upward trend. However, it is important to note that gold, as an asset, is more affected by macroeconomic conditions and less by daily technical fluctuation. Factors such as interest rates, inflation, and the euro-dollar exchange rate shape the overall picture. 4GLD presents several advantages for the investor. First, it offers exposure to gold in an easy, transparent, and safe way. There is no need to buy physical gold or store it. In addition, it is a hedging tool, that is, it acts as a safe haven in times of turmoil. At the same time, the transparency of its structure and its direct correlation with physical gold make it more attractive than other ETFs that invest through derivatives. However, there are also significant risks. The storage cost, although small, works cumulatively and reduces the return. The price of 4GLD is also affected by exchange rate factors, as gold is priced in dollars while the ETF is traded in euros. Finally, In periods of sharp interest rate increases or a strong stock market, the attractiveness of gold may be limited. For investors, 4GLD can act as an important diversification tool. It is usually not recommended to place a large percentage of the portfolio in gold. A range of 5 to 15% is considered reasonable to act as a risk hedge. In times of crisis, its presence can limit the losses of an equity portfolio. Correspondingly, in phases of economic prosperity, it can lag behind stocks, but offers stability. Time is of the essence. 4GLD is not for day trading, but for strategic positioning in the medium and long term. Given the current international situation, rising inflation, geopolitical tensions, interest rates in transition, demand for gold is expected to remain strong. 4GLD could therefore continue to be a key tool in the investor's toolbox. In summary, 4GLD is a worthwhile product for those who want to gain exposure to gold without the constraints of physical possession. It combines transparency, security, and liquidity while offering relatively low costs. Despite the challenges, such as storage costs and monetary policy impacts, 4GLD's position as an investment tool remains strong. What is your opinion on 4GLD? Is this ETF worth investing in? Let me know your opinion in the comments. Thanks for following our analysis. If you found the video useful, please like and subscribe to our channel to stay updated on the latest market developments.